Welcome back. Now this is the second lecture in income tax. Now let's understand what are the new things, right? In the last lecture we understood what are the sources of income tax law, right? All that together become income tax law, like income tax act, income tax rules, annual amendments, circulars and notifications, then judicial decisions, all that together. It's not that this will apply or that will apply, all together will apply. That's what we learned in the last class, right? Now today the very important thing we are going to discuss, and that is charging section 4. What is charging section? To do anything there should be some authority. I'll tell you, if you have to do anything in your house, you just take permission from your mom or dad, yes or no. It's as simple as that. They say okay, you do, and you do. But when you come out of your house, when you come into the business world, when you come into the corporate world, when you get into government administration, the permissions are not given like that casually. The permissions are given through proper written documents, so that the person giving permission should also be held responsible if something goes wrong, right? And clarity should be there between the parties. So everything is written. In the same way, if government want to levy income tax, levy means charge, that means ask the people to pay income tax, government should have the authority, some power to charge. Okay, article 265 gave the power to make the income tax law in line with constitution. But once the income tax law is made, in that law something should be written, right? Ki we authorize to levy tax, charge tax, and that section which gives the power to levy income tax is called as charging section, section 4. What it says? It says that you earn income in the previous year. For that you pay tax in the assessment year. Now you may be thinking, ki sir, what is this previous year? What is this assessment year? In simple language, I'll tell you that you earn income in year 1. Okay? Do the total of the income. Now total income of year 1 will come only once the year 1 is complete, correct? If year 1 is not complete, how can you know what is the total? So that's why in year 1 you earn the income, do the total of it, and on that income you pay the tax in the year 2. So year 1 is called as previous year and year 2 is called as assessment year, or in more simple language, the year in which you earn income, that is year 1 you earn, right, is the previous year, and for that income the year in which you pay tax, that is year 2, is assessment year. Same way, again you also will earn income in year 2, right, and for that you pay tax in year 3. Now what happened? What happened is your year 2 become the year of earning income, that is previous year, and for that income, because once the year is over you know the income, right, you pay taxes in year 3, that is assessment year. Like that it continues, right, overlaps, right, year 1, year 2, year 3, year 2, 3, 4, like that it continues. Now, so you earn income in the previous year and you pay tax in the assessment year. That's what the charging section says. Charging section also says that okay, whatever you earned income in previous year, for that you have to pay tax in assessment year, okay. But at what rate of tax? What is the rate of tax? So charging section says the rates are specified in the Finance Act. So Finance Act will lay down the rates of tax for individual, HUF, company, everything. So whatever rates are given in the Finance Act, that will be applicable. For your understanding, let me tell you one thing, that your Finance Act 2022, for your exam this is very important, right? Your Finance Act 2022, the rates which are mentioned there are applicable for your exams of assessment year 23-24, right? For your exam, what is the assessment year applicable? 23-24 assessment year. And for that assessment year, Finance Act 2022 will tell the rates of tax. But there are certain areas of income where the rates are mentioned in the Income Tax Act itself. Like I'll tell you that people participate in lottery. It's not at all encouraged. Participating in lottery is not at all right, but still many people participate. So if people participate, they either earn income. If they earn income, then Income Tax Act says under section 115 BB, what I said, under section 115 BB, and see, they are capital, not small, okay. B should be capital, because in income tax when you study na, when this type of things come, alphabets come, are you using small alphabet or capital words? That matters a lot, right? You be careful, because you are learning for the first time, so I should tell, that's my duty, and I'll tell each and every minutest of the thing for your success. Now under 115 BB, 115 BB, 30% is the rate of tax for lotteries. Similarly, if you have long-term capital gain income, capital gain means you sold your building, right? So that is asset, right? Building is an asset, and if it is fixed asset, we call it as capital asset, correct? And if you sell such capital asset after a particular period, I cannot tell you the period now because you will be confused with the numbers, okay? Because it should be understood in capital gains chapter in detail. After a particular period, if it is sold, it will be long term capital gain. If it is sold within the particular period, within the period, short term capital gain. So if you are earning long term capital gains under section 112, like I said, you sold building, you sold land, you sold industrial undertaking, anything, after keeping it for a particular period and after that only you sold, then 20% is the rate of tax. Suppose you sold it within the period and you sold shares, right? That too listed in the stock exchange. Like Reliance company's shares, you can buy on the stock exchange, you can sell on the stock exchange, yes or no? If you sold Reliance company's shares within the period, right? In that case, what will happen? 15% is the rate of tax. So I'll tell you what is the period just for understanding. Reliance company's shares, if you sold for less than 1 year period, that means you purchased on 1st January and you sold it within 1 year period, from the date of purchase till the date of sale, you will check the period. If you sold within 1 year, then it is short term, and if it is short term and that too listed shares which are traded on stock exchange, 111A section applies and 15% is the rate of tax. What is the rate of tax? 15% is the rate of tax. So what did we learn out of this? that you earn income in the previous year, for that you pay tax in the assessment year. Second thing what they said, clearly understand, I am telling you, don't worry. Second thing what they said, that rates of tax are there. The rates of tax, some are mentioned in the Finance Act, every year they change, and some are mentioned in the Income Tax Act itself. So whatever are mentioned in income tax itself, like 115BB I said, or 112 I said, section I said, I even said 111A. So these sections which are mentioned in income tax, right, these rates don't change generally. I did not see, at least from last few years, that the rates changed. Okay, clear. And Finance Act, every year they change. Now what they say in charging section, section 4, that for the tax what you have to pay, generally what was happening in the past, many years back, I am telling, that you were to earn income in year 1, that is previous year, and for that you were to pay tax in year 2, that is assessment year. But the problem was, people were to escape taxes, be lazy to pay taxes, try to avoid taxes, all that continuous problems income tax department faced. Then they came out with a solution, that pay tax as you earn. So what happened? They introduced some concepts like advance tax. So now you earned income for first 3 months, right, of the first year, you pay advance tax. Again 3 months you earned, you pay again advance tax. Like that they asked you to pay as you earn. Another concept they introduced, TDS, tax deducted at source. Suppose example, Reliance is paying you salary. So you are earning income. Now you are earning income. If government asks you to pay, you are lazy. You don't pay. So government asked Reliance Ji, please deduct the tax portion from his salary and pay to the government. Reliance said okay, and they deducted tax from your salary, whatever is actually to be paid by you, and they paid to government on your behalf. So this way the charging section says that now government is trying to collect the taxes as you earn income, either in the form of TDS, Reliance example, advance tax, another example, 3 months example I gave that. Okay, so now what I taught to you, basics of charge section 4 I taught you. I said for any income earned in the previous year, you pay tax in the assessment year. I said that tax rates can be either decided, mentioned in the Finance Act, which change every year, or can be mentioned in the Income Tax Act, as I said, section 111A, 112 or 115BB. Then I said that now people are paying taxes in the name of TDS and advance tax also. Now just remember these keywords. If you don't feel it from heart in depth also, don't worry, right? Because income tax is like a net, not internet, like a net, like fish net in simple language. Every wire is connected to the other wire. Now once you complete the whole subject, then you will be able to connect all the dots, as Steve Jobs say, right? So to connect all the dots, first you should know what are the different dots, where the dots are. Okay, so we are just started the journey, don't worry. Okay, let's come to the next point. Now basics of charge section 4 is over. Now we have to understand two words, one is previous year and second one is assessment year. Chalo, let's start with assessment year, section 2 clause 9. Now this is also very important. Whenever we talk about section 1, section 1 just introduces the law to you, like Income Tax Act is applicable to whole of India. Income Tax Act came into force from 1st April 1962. It just introduces. Section 2 talks about definitions. And now every definition is mentioned in section 2 itself. So every section is section 2. There are many definitions. Now each and everything is independent of the other. So that's why they don't use the word subsection. They use the word clause. If suppose example, I write one essay and all the paragraphs are connected to each other, then you can say the essay is section and the paragraphs are subsection. But if suppose you are writing something which is all the paragraphs are there but they are not connected to each other, then you can say essay is section and paragraphs are clauses. That's simple as that. So when I am talking about section 2, it is all definition section. That's why they are not connected to each other inside all matters. So that's why we use the word clause. Assessment year section 2 clause 9. Okay, what is it? It's a period of 12 months. Simple language. It's a period of how much? 12 months. Now period of 12 months starting from 1st April. Starting from 1st April and ending with 31st March. Starting from 1st April, ending with next year's 31st March. Now let's take our exam perspective. Your exam, I said assessment year is 23-24. I said your exam assessment year is 23-24. That means from 1st April 2023 to 31st March 2024. That's it. Clear? 1st April 2023 to 31st March 2024. Now, what happens in the assessment year? As I already said that you earned certain income in previous year, for that assessment is done. Now, what is assessment? Assessment is declaration of income, final payment of taxes, right? Okay, declaration of income, and we declare the income through income tax returns. We declare the income through income tax returns. So declaration of income is done and final settlement payment of taxes is done. That is what assessment is. Okay, so section 2 clause 9 talks about what? Assessment year. It's a period of how much? 12 months starting from 1st April ending with 31st March. Okay, for our exams 23-24 2023-24 is your assessment year. 1st April 2023 से लेकर 31st March 2024 तक. Then we discussed the income earned in the previous year. You earn income in the previous year. For that you pay taxes in the assessment year. Final settlement, declaration of income through a document called as income tax return. Now come to section 3, previous year. Now what is previous year? We have to understand. Previous year generally is a period of 12 months. It is the year in which you earn income. It is the year in which you earn income. But then why did the income tax department did not use the word income year? They actually used the word previous year, correct? Why they used it? Because previous year is the year which comes immediately before the assessment year. Like I said, your exam assessment year is 23-24, correct? Yes or no? So what is the immediately year before that? Sir, 23-24 year is there. If before that, if we have to check 20-23, absolutely right. So 20-23 is your previous year. Okay, 20-23 is your previous year. So what is previous year? Previous year is the year which precedes, comes before the assessment year. Okay, and assessment okay, and it is the year of earning the income. Whatever income you earned in the previous year, for that you pay taxes in the assessment year. Now let's continue. Suppose you started a new business. Suppose I started my company on suppose 10th December 2022. Okay, 10th December 2022. So from 10th December 2022 till 31st March 2023 will become my previous year. Suppose I joined another job on 1st January 2023. So 1st January 2023 to 31st March 2023 will be my previous year. So the company example is for business, you can see in the table, and the salary example I gave na, that is for source of income. So new source of income started from 1st January 2023 till 31st March 2023, the year ends. So in the first previous year, you remember that maybe it will be 12 months if you start on 1st April, or it may be less than 12 months also. Like in my example, 3-4 months was there. So no problem with it, right? But subsequent previous years are there, na? Second previous year, third previous year, all that will be 12 months only. Okay, no doubt. Perfect, very good. Now I'll tell you one more thing. That okay, like for my business, I started on 10th December. My salary I started on 1st January. So for business source, the previous year period was different. For salary source, my previous year period was different. Like business started from 10th December to 2022 to 31st March 2023, and salary started from 1st January 2023 to 31st March 2023. So the period are different. So there are two different, we can say, periods. But ultimately, when income is computed, all that is aggregated. Aggregated means totaled, right? And then only we pay taxes. That's what they explained in the notes. Okay? So clear to all of you? Yeah. There are certain exceptions to the previous rule. The rule. The rule I'll tell you. You earn income in the previous year, and for that you pay taxes in the assessment year. You would have got bored by listening to this so many times. But why I am repeating so much? Because you should remember that's what the target is. Hey, whatever you are learning for the first time. And when you learn something for the first time, it's not that easy to remember. And my duty as a teacher is to repeat it many times so that it is inculcated in your thought process, the key terms of income tax. Now come to the concept. What is the general rule? That you earn income in the previous year, and for that you pay tax in the assessment year. You earn income in 2022-23 and pay taxes in the assessment year 23-24 is the general rule. But there are 5 cases which I am going to teach now. Section 172, 173, 172, 174, 174A, 175, 176. These are the 5 sections, cases where you earn income in 22-23 and you also have to pay taxes in 22-23 itself. Okay. That means your previous year will also be treated as assessment year. So is it common or exception? Exception, right? There are 5 exceptions to the general rule. So exceptional situations tell that you earn income in the previous year and your previous year itself becomes assessment year for that 5 cases. First case, let's discuss. Income of non-resident shipping business. Suppose example, there are some shipping companies like I don't remember. Suppose British shipping company is the example I am taking. Now that company's ship come to India, unload certain materials, or people get down from the ship here and the ship goes back. Now they are coming to India means they are earning some income because of India also. They have to pay flat 5% tax. Okay. But government says that as the ship comes, immediately pay the tax and then only go. Why? Because the company may not send the ship again, right? Is there any guarantee that they will send the ship again? No guarantee, correct? And they are basically non-resident. So government says as and when they are caught, let us collect the tax. As and when you earn income from India, immediately pay the tax. That means your previous year itself will be treated as assessment year. The major concept, thought process is, if somebody is staying in India, government has trust. Where he will go? He stays in India. We will catch him anyhow. We'll collect tax from him, no problem. So government says, no problem. You earn income in previous year, pay taxes in assessment year next year. But non-resident shipping business, no guarantee, no belief, no trust. So government says, chalo, immediately abhi nikalo, right? So you earn income in the previous year 22-23 and pay taxes in 22-23 itself. This is 172 section. Now come to 174. What it says? Suppose person is leaving India permanently or for a long period. 10 years he is not going to come to India back. Now such persons, what government will say? Babuji, you have to pay tax first here. Then only we will send you outside India. Suppose example, somebody got job in Google. Here he was working in Infosys. He applied in Google for jobs and he was selected in Google. Now when he is selected in Google California, chances that he will not come are more. Right? He is going for employment. So government says, okay, whatever salaries you earned from Infosys, for that tax hisab abhi karo. Let us calculate tax now and immediately pay, then only go. You may get a question. Sir, kaisa मालूम होता sir? Permanent जा रहा, temporary जा रहा? अरे, I'll tell you, there is something called as visa. There is a travel visa and there is a permanent visa. If suppose somebody is going on travel visa, government says, जाओगे कहाँ बच्चू, आना तो इधर ही है, right? Where will you go? You again have to come back after 30 days, 60 days, 90 days, once the visa lapse, travel visa. But permanent visa, he will not come back. So government says, all the taxes, whatever dues you have to pay to government, pay, then only you will get visa clearance. And that's how government catch. Section 174, person leaving India permanently or for a long period. For him, previous year itself will be assessment year. Okay. Now let's come to 174A. What it says? It says that if organizations or associations are created for temporary purpose. Like example, there are certain concerts which happen actually. Like British band is there, music band is there, or American music band is there, coming to India, yo, party mood. So like that some programs happen in India. So what they do is, to conduct that event, many people come together. Like news channels are required for marketing, websites are required for selling the tickets, event organizing team is required, the band has to come. So many people are there to conduct one event. Security agencies are there. So all that create one association. They conduct the show, complete it, earn income and wind up. So these are associations created for temporary purpose. Now what government says, that if it is like that, then you immediately pay the tax. We will not wait for next year. अरे next year क्या, इस साल का ही भरोसा नहीं है उसका, right? We don't have trust that he will even be available in this year. So what government says, whatever you earned, immediately you calculate your income, immediately you pay the tax. You cannot go without paying the taxes. That's how government catch these associations. So associations formed for temporary purpose are there. Section 174A, they have to immediately pay the tax once the event or activity is over, based on the income earned. There are people who sell properties just to avoid taxes. Section 175. What it says? If somebody is trying to sell property just to avoid tax, then government says, Babu, please pay tax in the same year itself. You may ask me a question, sir, how will the government know? दुश्मन कभी बाहर नहीं होते, दुश्मन घर के अंदर ही होते हैं. The employees of the same organization, right? Family members of the same person will communicate to income tax department. Most of the cases this only happens. They communicate to income tax department that this person is trying to sell property just to avoid the tax. Then income tax department will do inquiry and catch hold of this person, and not only that, government will also collect, the department will also collect the taxes in the immediate previous year itself. That means they will not wait till the assessment year to collect the taxes. They will say अब बीच पे करना बाबू, तू तो avoid करके भागने वाला है लग रहा है, right? You are maybe avoiding the tax and may run away from the country or do something like that. So we don't believe in you. Please pay tax immediately. 175 section. Okay. 176. Discontinued business. So if suppose some business is discontinued, many businesses are discontinued, right? Close it down. Like Telenor was a company, Uninor was a company. This company's Reliance Communication, as of now, it totally did not close down, but still it is in the verge of. So if some businesses are closing down, then government, that is income tax department, has two options. If they have trust on this businessman, they will say no problem babu, you whatever you earned in this year, you pay tax in the assessment year. But if they don't have trust, then they say income earned in the previous year, the same previous year will be treated as assessment year. That means 20 to 23 previous year for discontinued business will be treated also as the assessment year and has to pay the tax and close down. It can be done. Suppose if Ambani is closing some business or Adani is closing some business, government has full trust, no tension. What government will say? No problem. You pay tax in assessment year. कहाँ जा रहे हो? भरोसा है तुम्हारे ऊपर. Suppose if Vijay Mallya is closing business or Nirav Modi is closing business, Babu, please, पहले tax, फिर बाद में जाना, please. Right? This is how it happens actually. Are you clear with what I said? So we discussed that general rule says that you earn income in the previous year and pay taxes in the assessment year. Earn income in 22-23 previous year and pay taxes in 23-24 assessment year. But 5 exceptional situations, section 172, non-resident shipping business, 174, person leaving India permanently or for a long period, 174A, the associations for a created for temporary purpose, 175, person transferring property to avoid taxes, 176, discontinued business. In this first 4 I said na, they are compulsory. That means income of previous year should be assessed in previous year itself. But in section 176 case, it is discretionary. Either if income tax department says in the previous year itself you pay tax and treat previous year as assessment year, or in the next year like normal general rule also it can be done. Okay, now we completed so many things. Right, shall we go to next part? Assessee. Who is assessee? We have to understand. Tell me who is an assessee. Assessee and person are connected things. Okay, so I have to teach you person first and then assessee. Chalo, for the time being you just understand assessee means individual. Okay, then I'll teach person. Assessee is defined in section 2 clause 7. Section 2 comes, it means latter there is no subsection, it is only clause, right? Now section 2 clause 7, assessee means what? Dekho, a person who is earning income, who has to pay tax, is the assessee in simple language. So either the person has to pay income tax, interest on income tax, any penalties under income tax, or fees under income tax. If it is the case, he is an assessee, right? Now, second point, if on him the proceedings under income tax are conducted. Suppose example, you are not a income earner. Suddenly income tax department raided your house. They found that around 400 crores are kept in your house. Did you earn income? You are not the income earner, but you are keeping the money. When they raid your house, they catch you, then obviously income tax proceedings will be conducted on you. Of course, you can name the actual persons also, but you will also be liable. So if any income tax proceedings are conducted, now you are earning income, you have to pay tax, and because you tried to avoid, so proceedings are conducted. Or you are saying that you don't have any income, but you are caught in such type of situations, so then also proceedings are conducted, right? Then you are called as assessee. Suppose father earned income but died without paying taxes. Now income tax department cannot go to Yamlok, Yamunda. Arey, without tax, how did you send him? Nah, income tax department officers cannot do so. So income tax department officer say, okay, father died, right? But son is there. So whatever income father earned, for that son should pay the tax. So son will represent the father and pay the tax. Can we say son is the deemed assessee, representative assessee? That is okay. Sometimes what happens, if company is going into liquidation, closing down of company. Now company is anyhow closing down. Then for that court appoints one person called as official liquidator. Now if you say official assignee, if you say official receiver, if you say official liquidator, all are one and the same. So company is closing down, liquidation is happening. Company appoints, court appoints one person called as official liquidator. Now official liquidator will sell all the assets of the company to pay the loans to the possible extent. Now on the sale of the assets, capital gain income is earned. Maybe some operations of company were there, company also earned some profits or some losses. But for all that, official liquidator becomes the representative assessee. Like for father's death, son became representative assessee. On liquidation of company, liquidator, official liquidator will become representative assessee. If suppose income tax department declared that you are a deemed assessee, then you are a deemed assessee, no doubt. When they will declare, if there is a genuine reason, correct? Yes or no? Absolutely yes. Right? So we understood this. So we understood assessee means who is liable to pay tax, interest, penalty, on whom proceedings under Income Tax Act are conducted. The person who is representative assessee, a person who is deemed to be an assessee, right? Or a person who is in default, assessee in default. Suppose you have to pay income tax but you defaulted. You have to, like, I incorporated a company, and if I am paying salary to my employees, I have to deduct the tax. If I did not deduct the tax, which actually I should, then I will become assessee in default. Or if suppose I have to file income tax return on time, I did not file income tax return on time, I become assessee in default. So this is what assessee definition is. I feel you should not have any doubt on the term assessee. Okay, shall we go to the term person? Section 2, clause 31. Yes, person. So first one is individual. Sita, Geeta, Meeta, Ram, Shyam, Ghanshyam. So who are these all? These are all individuals. Okay, individual is a person. So short once I'll read for you, then in detail it is there. There I'll explain also. I will show the detailed version and explain. That would be better for you, right? Let's start. Individual is a person. HUF is a person. Company is a person. Partnership is a person. AOPBI is a person. Local authority is a person. And artificial juridical person. So how many persons are there? अरे देखो यार, इधर 5 उंगली, इधर 2 उंगली, 5 2 7, right? 7 persons are there. Individual, HUF, company, firm, AOPBI, local authority, AJP, artificial juridical person. Now individual I explained to you. Hindu undivided family. Sir, I have a family, mummy, papa, me, brother. Arey yaar, okay, I understand you are Hindu family. But here we are not talking about a family only. Here I am talking about, are you registered under Hindu law as a business entity? If you are registered under Hindu law as a business entity, you have a proper PAN card for your Hindu undivided family business, then only we can say you are a independent separate entity. Okay. Even Sikh families, Jain families are covered under Hindu undivided family. Okay. Clear? Very good. All that I need not explain to you. Head of the family is karta, other members are called as co-parceners. ये सब कॉमर्स में पढ़ लेना बाबा, इनकम टैक्स में जरूरत नहीं है. Right? So income tax, what you need to understand, is Hindu family registered under Hindu law as a business entity? If yes, it is Hindu undivided family. Jain and Sikh families are covered under Hindu undivided family. It is a separate legal entity. That's it. Okay. Third one, company. What is a company? Indian company is a company. अरे ये तो मालूम है सर. अरे बता रहा हूँ यार, सुनो तो सही. Right? Indian company is a company. Company registered outside India. Bolo. Company registered outside India is a foreign company and it is also treated as company under income tax. Okay. Any institution, association or a body, right, whether incorporated or not, doesn't matter. But if it is treated as a company before 1st April 1970, before 1st April 1970, before 1st April 1970, then it will also be treated as company. And if it is an institution, association, body corporate, right, whether incorporated or not, but if it is declared as a company by the CBDT, full form bolo, Central Board of Direct Taxes. If it is the case, then it is also a company. So company has 4 points to remember. First one, Indian company. Second one, company registered outside India, that is foreign company. Third one is institution, association, body corporate, whether incorporated or not, but treated as company before 1st April 1970 by the government. Okay. So last one is institution, association, body corporate, incorporated or not, but treated as company by the CBDT. Okay. So individual over, HUF over, company over. Now partnership firm. What is partnership? Partnership definition. Partnership is a relationship between persons who have agreed to share the profits of the business carried on by all or any of them acting for all. So simply we can say Ram, Shyam, Ghanshyam, 3 people come together, enter into partnership. It's a partnership. Now Ram is a partner, Shyam is a partner, Ghanshyam is a partner. All of them, three of them together are called as what? Partnership firm. Now for income tax purpose, okay, I'll tell you what is normal and what is for income tax purpose. Normally, partnership, all the partners are jointly called as partnership firm. All the partners are jointly called as partnership firm. So can we say that partnership firm is separate from the partners? In normal all business activities everywhere, the answer is no. Partner and partnership are one and the same for all purposes. But for income tax, partnership firm is different and partners are different. Partnership firm, once it is registered, we get a PAN number for it, permanent account number for it, and it becomes an independent entity. So partnership firm's income is different, partner's income is different for income tax purpose. Okay, so partnership firm किसको बोलते हैं मालूम हो गया ना? It's a relationship between persons, that is partners, who have agreed to share the profits, profit share करते, even losses share करते, who have agreed to share the profits of the business, business करते. It is not social service institution, it is just for profit business. Okay, carried on by all or any of them acting for all. Individual member of partnership firm is called as partner. All partners together are called as firm. So partners and partnership are generally one and the same, but for income tax, once it is registered, it is a separate entity. Firm is a separate entity. Okay, only for income tax purpose, not for any other purpose. So we understood four things: individual, HUF, company, partnership. Now come to AOP BOI. AOP stands for Association of Persons. BOI stands for Body of Individuals. Suppose example, there is a gym chain by Hrithik Roshan and Tiger Shroff. What is the name? Bolo to sahi. Cult Fit, Cure Fit, Mind Fit, whatever fit, but it is there, right? So that gym chain is there. There I can go pay 18-20,000 whatever and take membership. So I am an individual, I took membership. For that chain, Deloitte took membership for all its employees or partners, whatever it may be. So corporate member. So if there is an individual member, corporate member, even partnership firm can become a member, HUF can become a member, then such organization is called as Association of Persons. Such organization is called as Association of Persons, and it is always for profit. Association of Person, and it is always for profit. If it is non-profit company, you cannot say it is Association of Persons. Only if it is for profit, commercial activity, then it is Association of Persons. Okay? Then what is Body of Individuals? In our Basti village, we create something called as Ganesh Utsav Samiti. Ganpati Bappa Moria. So we create Ganesh Utsav Samiti. And here Ramji hai, Shyamji hai, Ghanshyamji hai, Bablu hai, Taklu hai, Sahab hai. ठीक है? All of us create an association, Bhayalal Nagar Ganesh Utsav Samiti. So we created like that. Now in this, all are individuals, correct? So this is called as Body of Individuals, BOI. Now Body of Individual can be created for commercial purpose or non-commercial purpose also. Like Ganesh Utsav Samiti is for pure spiritual purpose only, right? For get together purpose only, right? For praying Lord Ganesha only. So it is non-commercial. If Body of Individual is created for some commercial activity, like example I'll tell you, in villages there are many women who actually create some groups. They set up stalls at various different places, sell some different products and earn income. Now this body of individuals is for commercial activity. So body of individual can be for commercial activity or social activity. But association of persons where any person which I listed down can become a member will only be for commercial purpose. Local authority. Now I can discuss about it in much more detail, but आपके लिए कुछ फायदे का नहीं है, so waste of discussion. Local authority is simply municipality, town area committee, cantonment committee, panchayat, right? So you can name many, but municipality is municipality only. In Hyderabad we call it as Greater Hyderabad Municipal Corporation. In Mumbai they call it as Mumbai Mahanagar Palika, right? So like that it goes, but it is municipality in simple language. Last is local artificial juridical person. If something cannot be fit under the above 6, it is not individual, not HUF, not company, not partnership, not local authority, not AOP, then what it is? Then it is artificial juridical person. So it is basically not a natural person, not covered under the above 6, right? And you cannot sue them directly also in its name. You have to sue the trustees, something like that. Then we can say that it is artificial juridical person. Like DTs are there. DTs means, like I will tell you, in Ram Mandir case, Ram Lalla Virajman. That means actual God Rama. Prana Pratishta is done. Right? So Lord Rama's Prana Pratishta is done. So Lord Rama is the DT. So Lord Rama is artificial juridical person. Very bad to say, but ठीक है, in income tax language it is like that. It is super person actually, but ठीक है, artificial juridical person for your knowledge. Now I'll tell you that now if any court case has to happen, will Lord Rama come to the court and give judgment or discuss or present his case? No, right? So there are certain trustees who actually fight the case on behalf of Lord Rama. Same way Tirumala Tirupati Devasthanam is there. So Tirupati Devasthanam trust is there. So trust will represent Lord Balaji. So in such a case we can say it is artificial juridical person. Mosque and church, no, because the Prana Pratishta concept is there only in case of Hindu temples. They are places of worship. Church is a place of worship. Mosque is a place of worship. Agreed. But there is no Prana Pratishta, so they are not persons. Okay? Yeah, it is a Supreme Court judgment. अरे मैं दिल से कुछ नहीं बोल रहा रे बाबा. I'm not telling anything from my sense or feelings or emotions. The Supreme Court judgment I am quoting for you. Okay? So DTs. Usmania University is there. Universities. Usmania University. Tell me, is it individual? No. Is it HUF? No. Is it partnership firm? No. Is it LLP, limited liability partnership? No. Arey, LLP and partnership are treated as same under Income Tax Act. Okay? Yeah. Is it company? No. Is it local authority? No. Is it a association of person or body of individual? No. That's why Usmania University, Delhi University, or for say any university is artificial juridical person. So I feel with this you all understood what a person is. Person means individual, HUF, company, partnership firm, including LLP, local authority, artificial juridical person, AOP, BOI, all are persons under section 2 clause 31. With this, today we will wind up this lecture, and I feel you understood everything. Any doubts are there, please ping me. I would be very happy to answer your questions. Next lecture we will discuss what is income, because income tax, we know what is tax, but do we know what is income? In the next lecture we will understand.